Good morning and welcome to this top 30 trade of the month for Pair Trade Finder Pro Top 30 Equities Pairs. And the pair we're going to look at today is one of our old friends, APOG DOOR, APOG DOOR. And the training signal that we received was on the 20th of December. That was to go long APOG 26.73 a share, go short DOOR at 46.04. And let's take a quick look at that signal and figure out whether we would have taken it. Let's go through a detailed trade analysis. Now, some of you may have seen this, some of you may not have. We have a little infographic, and we're going to spruce this up and flesh it out a bit more over the next month or two. But we have an infographic here that takes you through how you need to triage every trading signal that you get from the Pair Trade Finder Pro Top 30 US Equities Pairs and any other pairs that you have in your watch list. And if you're looking for this infographic, you can find it here, pairtradefinder.com, videocourse.html, which should have been in your welcome email when you first subscribed to Pro. And it's underneath the very first lesson of the downloadables, and it's the pair trading process. Okay, so let's quickly go through this. So you get the signal from PTF. The first thing to do is check if the ratio chart is trending strongly. Okay, and if it is, there's no trade. Well, if we go to the ratio chart for APOG DOOR, this is the signal here on the 21st of December 2018 is actually the 20th. And what do we see? Well, we see a very flat ratio chart, so it hasn't been trending. We also see it hasn't broken out. It's at a low. This is a 2-year look back in this chart, and so it's at a very similar level to when another signal was called back in 2017, which also did very nicely. So we don't have a trending ratio chart. What we'd like to look at is, we're getting lower lows here, and do we have any divergence? And the answer is yes. Look, you've got higher lows here, but lower lows here, which would suggest this divergence would point to the fact that this may turn around. And that would, for me at least, give me a bit of extra comfort when looking at taking a reversion to the mean trade. You've got a flat ratio line and you've got divergence on the RSI chart. If we look quickly over here at the percent from mean, which is another very useful chart for determining whether this is historically way off, we see that it's low, but it's very much in line with support over the last 2 years. So looks like a pretty good entry level. Is it also at an extreme? Well, here's 30 on the RSI, and it is well below 30, more like 20. So that's at quite an extreme. So the pair chart setup that I'm looking at here, the other thing is the plus minus is at -3, which also historically over the last 2 years is a kind of a minimum. This is as low as it's gotten in terms of standard deviations below the mean. So from that setup, this looks like a good trade from a pair chart's point of view. So then we would go back to our infographic and look at the next step. So it's not trending. No, check if the stock charts are trending strongly. You can use whatever charting software you like. We have this in Pair Trade Finder Pro. All you need to do is just hit price charts when you're highlighting your watch list pair. And what it'll do is it'll pull up the price chart over the last year, and you can set the time frame, 2 years, 1 year, whatever you want. Let's take it over the last 120 days. And let's take DOOR over the last 120 days as well. So what do we see? We see the signal is here. So we see there's some news event that's brought this to gap way down. It was trending down. Then we know that it turned around and trended right back up, but that's 2020 hindsight. So we had a gap down, and it was trending. Now, the question is, how does that compare to the other pair, the other stock we're looking at in the pair, which is DOOR? And you'll see here, exactly the same time, with very similar price action, very low price on the 20th of December as well, and a same downward trend. So what that says is, okay, there is a downward trend at play over a short-term graph like this. You might want to look at it going back different time frame, 1 year, 2 years. We can see there's a pronounced downward trend. So it's a trending stock, and oops, so is APOG. Let's just go back to that for a second. I need to pull these up again because I unfortunately just closed DOOR. While we're waiting for those to generate, well, okay, so here we see the downward trend. We see DOOR exactly a very similar downward trend. and there was a big sell-off at the end of the year. This is where the markets were going. So the question becomes, how are they on a relative basis? And that's what matters. So the signal generated around here was this big divergence, you see, and we're going to check why that happened. And you can see they came well apart. Now, will they reconverge? Are they co-integrated? And we can see over the past year that they've done that traditionally. Every time they've drifted apart, they've reconverged nicely. So this looks like a good pair to trade from a relative return basis, which is what matters, okay, when looking at the trendiness of the chart. So if we go back to our nice little infographic, we see, are they trending strongly? Yes, maybe there's no trade, depends on how you look at it, but I look at it, they're both trending. However, their relative performance suggests that they are co-integrated, and there is a separation of the relative performance that may be able to be captured. Okay? If one were trending one way and the other were trending the other way, definitely not what you want to see, but they are moving in the same direction. So the infographic here then says check if there's any price-sensitive news that was released on the pair, and we're going to do that. But before we do that, you guys may not know this pair. You might be the first time you're watching the Trade of the Month videos. We've profiled this pair a couple of times over the last 2 years. It's been a big money maker for us. So I just want to take you very quickly through the fundamentals. These are two extremely similar businesses, Apogee and Masonite. Okay, one's got a market cap of 1.4, the other one's just under $1 billion. The beta is 1.6 on Apogee, 2 on Masonite. But most importantly, what do? Well, Apogee designs and develops glass and metal products and services in the United States. Basically, they make windows for all types of buildings, residential, commercial, all of that. And what does Masonite do? Well, it does doors, all types of doors for residential, commercial, and all of that. So they're in the same business segment, basic materials, building materials, okay? They have similar size, similar betas, and one makes doors, one makes windows, okay? And we've seen that traditionally they've done very, very well as a pair trade. So that's a little bit of the fundamental grouping, why we've put them together. You can look at some other factors, but I won't dwell more on that here today. So that's quickly the fundamentals. Why did we choose it? Well, I'm taking a look at a back test. This does include the last trade in it, which is the one we are analyzing now. But what we can see, including that trade, that over the last 3 years there have been 8 trades, 60% correlation, co-integration of 0.87. That's been higher than that most of the time. This last trade, it slipped off slightly below 0.90. But traditionally has been co-integrated. And the compound annual growth rate's been about 20%, 21%, profit factor of 6, max drawdown of 20, gross profit of 8,289, very low commissions for getting those trades, net profit of 7,400, average net profit a trade of about $900, and 87.5% winners. We're looking at this in Pair Trade Planner Pro version 1.3.8, which is our newest release that hasn't been released yet. This is a quick preview. We've added here both the gross and net profit in the P&L, so you can see the effective commissions over time on any pair that you're analyzing. And so the green line is the one that is interesting because that's how much you get to keep. Let's just quickly check something. Average days in trade on average is about 30 days for this pair. Okay, so let's keep that in mind when we're looking at news, which we're going to do now, which is the next thing in the infographic. So Masonite, we go, remember the trade triggered December 20th. If we look around here, there was an announcement December 17th. We don't think this is fundamental value affecting. It's announcing an executive leadership transition plan. Then any other of the announcements before that, it was November 21st, not interesting to this signal. And we can just conclude that this was the only new news that was in the market at the time, and we don't see it as a value affecting news release. Okay, they're going through a natural transition of management, which has been well communicated to the market. So what do we do then? We say, okay, so it doesn't look like there's any reason for this signal unless we go to Apogee and see what they have. And if we do that, we do come up with news that created the signal, which was on December 20th, and at the close of December 20th is when the signal was generated. Apogee had announced their fiscal results, and I'll just go very quickly through it. They didn't have great results, but neither did Door. So, as I say, these two companies are extremely closely correlated and co-integrated. What is interesting, though, and the reason for probably this signal, is that they revised guidance going forward. So, looking for the revenue growth of 6 to 7% compared to 8 to 10% previously. Margins basically at the lower end of the range. EPS again at the low end of the range. Adjusted EPS low end of the range. So it's slightly negative compared to guidance, and therefore you had a reaction in the stock. But again, if these guys' business is hurting and not doing that well, it's most likely that Door is going to be in a similar position. So when you get these short-term reactions, you have to decide whether there's a fundamental shift in the value of both businesses that's being reflected in that signal, or whether it's a knee-jerk reaction by investors who just say, I want out, and they just dump based on the results of the news announcement. So had you taken this trade, let's go back to the infographic, we would say, up to you, but potentially you would say, look, I don't think it was huge. It wasn't even an earnings miss. It was just a slight negative revision of guidance. And they're reporting about a month or two before Door. So you would expect Door to catch up. So you make your decision. If you say, yes, that's value affecting fundamentally, you wouldn't take the trade. But if you think it's going to probably come back to its mean, then you would say, I'm not going to worry about it. And then you would have to check to see if there's any stock price sensitive news due out in the next 30 days. Usually the easiest way to do that is to just jump back to your fundamentals page. You've pulled up here. We can see the earnings date now is going to be April 10th, April 15th. This is Apogee. They announced December 20th, so that's what caused the signal. They won't be announcing for another 30 days at the time of the signal. So they were, another 90 days. So they were clear. And then Masonite, they announced on February 19th and February 25th. So at December 20th, that was 2 months away. So they were clear. Masonite doesn't pay a dividend, so you don't have to worry about dividend dates. And then Apogee pays a dividend quarterly on the 2nd of February. So as of December, it would have paid it already in November, which means you don't have to worry about dividends either. So from the infographic point of view, this is clear, this is a no, and you take the pair trade. Okay? So if you had taken the pair trade, where did you end up? Let's go back to our trading signals. So it was entered on the 20th of December and exited in February here, 19th of February. You made net $1,017. This is on IB data, okay? And that took you exactly about 60 days, 59 days, okay? And you made over $1,000, which is 10% return on nominal leg size, and about it's almost over 90 days. It's a very healthy return on CFD margin as well, somewhere around 25 to 30%. So that's how we take a look at trades, decide whether or not to take them, and we hope you found that useful. Please feel free to send us any questions or queries at support@pairtradefinder.com. Also take a look at our suite of how-to videos as well as our video course. Make sure you've taken that as well. Happy trading, everyone.